Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will generate a profit and loss statement, discuss its components, and export the profit and loss statement to Excel within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are at the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We're going to be preparing the profit and loss statement, which is the income statement type of statement within QuickBooks. We'll discuss its components and we'll compare and contrast it to the standard income statement we might see in financial accounting. To do that, we're going to go down to the reports on the left side. And if we're in the frequent reports, it will probably be there as the profit and loss. It's going to be one of the major reports, one of the financial statement reports. It's also known as the income statement when we look at financial accounting. So it's really important, by the way, to know that difference. The profit and loss statement, if you are talking to an auditor or someone from financial accounting background, they will be asking for an income statement. If you're talking with a bookkeeper, someone that works primarily with QuickBooks, then they will primarily use the word profit and loss. Most likely, we need to understand the two, as we need to with many different things within the QuickBooks software. The terminology slightly different. We need to know the core terminology for financial accounting and the terminology that is related to QuickBooks in order to bridge the gap between people that possibly work in public accounting, like auditors, and people that work primarily with QuickBooks on the data entry and general ledger side. So we're going to type in the profit and loss, and that's going to be the profit and loss, should auto-populate. We will select the profit and loss. We're going to run that profit and loss. We will run it for the 2-month period, so we're going to run it for 01/01/21 to 02/28/21. So that's January 1st, 2021 to February 28th, 2021, and run that report. Now note that we might not have the data yet. We're going to run these reports before we put the data in. If you're working with this problem, you don't have any data yet, we will be working on the 2 months worth of data. We're going to look at that end result now, and as we enter the data, we're going to be jumping back and forth to this report and then get to this end result at the end of the process. But whatever data we're looking at, this is going to be the standard format of a profit and loss, whether you're looking at this company or a different type of company. First thing we want to note is that we have a date range down here. It says January through February 2021. So we need to have some type of date range. That's what a profit and loss is, as opposed to the balance sheet, which would, if we had this same date range, just give us one point in time. Even though we have the date of January through February, it would only give us February as the one point in time, because the balance sheet is as of a point in time, and we'll then just choose the end point of whatever range we put into the system. Here, it's going to tell us this is a range. It starts at the beginning, ends at and that beginning is January 1st and ends on February 28th. And that's important to note because every account within the balance sheet now only makes sense if we think of a range of dates. If we have a beginning point and an ending point, for example, if we're talking about our revenue accounts down here, they only make sense if we say this revenue is over a certain time period, whether that be a month or a 2-month time period, in our case, a quarter or a year. That's the only way this number makes sense. It doesn't make sense as of a point in time. It doesn't make sense as of a balance sheet terminology as of the end of February. If we were to look at a standard financial accounting statement, it would probably say, usually the term would be for the month ended. Now this is a 2-month time period, so it might say for the 2 months ended of February 28th. And we would typically have to know that terminology and say, well, that means if it's for the month ended, that the beginning must be at the beginning of the month, the first, and the end must be at the ending of the month. Here we have this little dash, of course, which means it's going from January 1st, to February 28th, the full 2-month time period. As we scroll down here, we can see that we have the data here. It looks typically like a longer report. The standard income statement will be longer typically than a lot of other reports, typically than the balance sheet, mainly because we often have a lot of groupings in terms of the expenses down here. We're going to minimize this and look at each of its basic components, and then we'll go through and maximize and see what we have. So we're going to minimize this to its smallest components that we can have here. I'm just selecting all the triangles so that they're going this way. So we've minimized everything, and this is going to be a nice function within QuickBooks that we can make this as short as possible. If we're presenting something, this is a nice format to use because we can just say, hey, here's the bare bones of what we're talking about. This is the big picture, and we can say, hey, there's our net income or loss in this case, and go from there as we want more detail. Now, with the most basic financial statement here is still a little bit more detailed than we might see in just a single step financial statement. In essence, in financial statements, all we have are two types of accounts. We have revenue accounts and we have expense accounts. Net income is going to be calculated as the difference between the two, revenue minus expenses. In this case, we have a loss, revenue being less than expenses. If within QuickBooks, within the standard profit and loss, the standard type of income statement, and note, of course, compared to financial accounting, it would be called an income statement. We have a profit and loss here. We have a multi-step income statement, typical if we sell inventory, as we will be doing here. We're going to sell guitars. So in that case, we often want more subcategories within our accounts. So first, we've got the income accounts. Those are usually going to be called, they could be called revenue accounts as well, income accounts. And so usually we don't have as many of them, meaning we probably only do one or two things in order to generate revenue, and we pay for everything else. So typically we have a lot more expenses than revenue. All the revenue can be grouped typically in a few different income or revenue accounts. Then we have the cost of goods sold. This is what we're going to use in terms of inventory in order to help us generate revenue. So the cost of goods sold represents inventory consumption in order to help generate revenue. We then have the subcategory of gross profit. Now, the subcategory is going to be there only in this multi-step income statement, and it's really useful if we sell inventory because that subcategory will give us that relationship between the revenue and the inventory that we are selling in order to generate that revenue. This relationship isn't as stark because we're showing demonstrations of multiple types of income, meaning we sell inventory and we have some service items. So this relationship is a little distorted because not all of our income, in other words, is from simply selling inventory. Then we have the expenses. This is going to be the other types of expenses that we will be having, typically operating expenses. Then we're going to have another subcategory, and that's going to be operating income. That's going to be the gross profit minus the expenses. And the operating income is typically going to be the income we're going to say is from normal operations. This is what we typically do in terms of revenue and expenses, and this then would be what can be expected or how we performed from our normal business operations. Then we've got the other income down here, and that could be other income and then other expenses. These are going to be things that we're going to say, hey, these are expenses and income that we had during this time period, but we didn't put the income up here and we didn't put the expenses up here because they're not part of our normal operations. We're saying, hey, these are kind of oddball. If there were certain circumstances that weren't the way they are, we wouldn't have these expenses. They're not part of our normal operations. There's something that happened to happen this time, but they're not part of normal operations. And that'll give us our net income bottom line number, being, of course, the net income, in this case, loss. Note, QuickBooks doesn't really have a thing where it says loss. It doesn't change the wording when we have a loss. So in this case, it is a loss represented by a negative number, and it's not being shown in the terminology. Now we'll go through these and we'll expand each component and see what we have within each component. We're going to start with the income. That's going to be the first number. That's going to also be considered revenue, and we're going to select that item, select the drop down. Now, typically we only have one or two accounts up here for most businesses because they only do one or two things. We're going to have a few different sources of revenue so that we can demonstrate that the selling of products, in our case guitars, inventory, and the selling of service items. We're going to rental service, we're going to rent equipment, and we'll have also other types of incomes we'll have for service in terms of maintenance of the guitar and lessons. So that's going to give us three revenue sources here. We've got revenue in terms of the equipment rental, revenue in terms of selling guitars, and revenue in terms of other service income. That'll give us our total income here, what we've earned. Now note what we've earned here. If we select any of these icons, I'll select this item here. What we've earned is on an accrual basis, meaning it's being formatted. You'll note it's being driven by when do we recognize revenue. It's being driven by the invoice and the sales receipt. So the invoice means we didn't get any money yet. It means that we processed the work and we did the work and we haven't yet gotten the revenue. But the invoice is the thing that triggers the income because it should be at the point in time or close to it when the work has been completed. The sales receipt means we did the work and we got paid at the same point in time. So these are the forms that trigger revenue on an accrual basis in the financial statements. And so we're going to go back to the report here. That's going to be our income. I'm going to minimize this back out. Then we're going to go to our cost of goods sold. I'll minimize all these first. We'll go to the cost of goods sold. Here's our cost of goods sold. That's the selling of inventory. So this cost only relates to the inventory. It's typically the largest expense that we will have if we have our primary sales or revenue generation being the sale of inventory. Now, in our case, of course, it's not. We have other things going on, so the cost of goods sold is not as closely related to the revenue or income as it otherwise would be if inventory was our primary source of revenue, the selling of inventory. If we were to select this icon, it would be driven as well by sales receipts and invoices. Those are the things that are gonna drive the recording of cost of goods sold, as we'll see when we start to input this data. Then we've got the gross profit, which is going to be income minus cost of goods sold. Don't confuse this with net income. It's just a subcategory on the way down. Remember that the cost of goods sold is an expense. It's our most important expense, although it doesn't have the word expense in it. It is something that we used up in order to help generate revenue. Then we have all of our other expenses. So if we select this drop down, we see all of our other expenses. Now we're going to have usually the most amount of expenses or items in this category because we usually only do a few things to earn revenue, and we usually pay for everything else. So everything that we don't actually do in order to generate revenue is something that will be an expense category. So typically we'll have a lot of different expense categories. The expense categories are really up to the owner as to how many expense categories we want. We could just put everything into expense, but that wouldn't give us much detail in terms of what we're expending on, and not a lot of information to make decisions in terms of how can we cut back expenses or reduce them or manage them in some way. So here's going to be our expense items. If we select any of these, we'll note that there'll be checks related to the expense that will drive the recording of expenses, and there will be bills that will drive the recording of expenses, meaning we could have had something as an expense as something that we paid for at a point in time, like we paid the phone bill and recorded the expense, or it could be something that we incurred and put the bill into the system and have not yet paid it. And those are going to be the items that will also be recorded as an expense on an accrual basis. We're recording the expense, trying to record it when we consumed it. And so the driving factor for QuickBooks is, did you write a check that's not related to a bill? Then we'll record the expense at that time. Or did you enter a bill for something that needs to be billed, like the utility bill, but you haven't yet paid it? Then it's going to record the expense at that point in time, which should be closer to the point in time that the work was actually done, that we actually incurred the utility expense. So we're going to minimize that. Then we've got the other income and the other expenses. So in this case, we've got the interest income, and interest income is down here and not up here because it's something that's not part of our normal operations. We're not in the business of just investing and getting interest. We're in the business of guitars, selling guitars, maintenance guitars, having guitar lessons. So we're basically saying, yeah, we got some more revenue down here, but this isn't our principal revenue. It's just some other revenue that we happen to have. This is our business revenue up here. This is other revenue. And then we have depreciation and other miscellaneous down here. Same kind of concept as to why these would be down here. Now, you may consider depreciation and other miscellaneous expenses as part of the normal expenses up here. The QuickBooks account has preset these to be down here, and there may be some debate as to whether these should be here or not, but the concept is going to be the same in terms of we're saying These aren't part of our normal operating expenses, and they're going to be down here in the other expenses. And then we're going to have the total other expenses, and that'll give us the net other income, which is the income minus the expenses. And then we have the net income at the bottom. So I'm going to maximize all these. We've got the income maximized, 3 accounts. We've got the cost of goods sold, all the expenses, and then everything else is set up. This, of course, is our bottom line number. We will go ahead and export this to Excel and save this report. So we're going to go select this export item down here. We're going to export to Excel. We should see an Excel items pop up on the left side. We will open up the Excel item that pops up on the left side. We'll then format this. I'm going to say enable the editing so that we can format. It will then populate. I'm going to pull this back up. And it looks like the format is what we need it to be. So we're just going to go ahead and save this item. So I'm going to go to the File tab. We're going to go to Save As. Then we'll locate in the Browse area where we would like to save this to. We're going to make a new document down here. We're going to say New Document. And I'm going to call it Excel Docs 2. And so we're going to say, I'm just going to select that item. And I'm going to change the name here. So we're going to call it, and I'll give it the date first. So I'll say Jan and February Prof. Let's say give it the year 2021 profit and loss. Now note the dates here is a little bit more tricky than a balance sheet because of course we could just put the end date. But it's really for a range, and we have a 2-month time period here. So we got January and February. Again, you probably want to consider how to save these in terms of the ordering to see that it will order in the proper way, and think about the kind of folders you want. How many folders do you want? Do you want a folder each year or a folder each month? And that'll help you to kind of think about how you want to save these in order to go back to them in a relative format, in a relevant format. So we'll save that, and that's going to be the profit and loss. Hello, in this presentation we will make a custom comparative profit and loss within QuickBooks Pro 2018, taking some of the functions we have seen in prior presentations and making a custom profit and loss with them. If you've been working along with us, we will be continuing with the Get Great Guitars problem. If not, that's okay. We're going to be customizing a profit and loss and looking at some of the functions in so doing. If you have access to the backup file, you can restore it by going to the File tab and restoring that information. We currently have the Open Windows open. To open the Open Windows, go to the View tab and Open Window List. We also have the Home page open, which can be found at the Company drop-down and Home page. We're going to be looking at a profit and loss and customizing that profit and loss using some of the features we have seen thus far. To do that, we're going to go to the Reports drop-down, we're going to go to the Company and Financial, and we're going to look at the Profit and Loss Standard. We're then going to change the date range to 01/01/21 to, well, it should say from 01/01/21, which is January 1st, 2021 to 12/31/21. And this will be the starting point of our information. It is a profit and loss, similar to an income statement, or the same thing as an income statement. We have income or revenue, those income accounts. Then we have the expenses, including cost of goods sold and other expenses, and ultimately arriving at net income. What we're going to do is we're going to customize some of this. We want to show 2 months of activities, so we're going to show January and February. And we'd like to show some percentage change or a vertical type of analysis with those as well. To do that, we're going to go to the Customize Report up top. And we're going to go to the January through February. In order to do that, we're going to say keep the first date January. And I'm just going to go through 02/28/21. So we've got January 1st, 2021 to February 28th, 2021. Next, what I'd like to do is change the total column to see just the months. So I'd like to see a month-by-month comparison. We're not going to do it by going to the previous month, as we've seen in a previous report where we had the month of the whole month of February, February 1st to February 28th, then shows the previous period. What we're going to do here instead is take the total and change it to the month. And we'll take a look at what that does first. If we select that, then of course we have January and February and the total. The nice thing about this type of form, rather than the previous analysis or the difference between the two, is that we have the January 1st. It's in order by what came first instead of the most recent month. And that's just a matter of preference on how we want the report to set up. And if we then we have the total rather than subtracting the two. This is a totaling report rather than a subtraction report. Then we're going to go back up to the customized reports once again. And we can't use the percentage changes here because, of course, we're not going to go to the previous period. That would give us a previous period type of calculation. That's not what we want. What we could do over here is we could do some of this vertical analysis type of calculations. We could have the percentage of income or the percentage of the row columns. I'm going to choose percentage of income. And if we look at what happens with that calculation, we now have the January and February, and we have the percentage of income, and that's going to give us then a nice calculation for each of these items in terms of a vertical analysis. So we can see the 2467.4 as it compares to the total of 2975.4 in the same column, and that gives us the 82 times 100%. That gives us the 82.9. If we were to go down here to say this 15 and see that we're comparing the 15 divided by the the total income of 2975.4, that gives us this number. If we say times 100, we get the 5%. So we're doing the vertical analysis in each of these categories. And the nice thing is that it also gives us the total category for January and February for the full time period. Same kind of vertical analysis. For example, if we took this amount here, this expense, 917 over this 19,274. Well, it's 917 divided by the 19,275.4 gives us this number times 100 gives us the 4%, the 4.8%. So that will be this calculation. That's what we have so far. What we're going to do now is we're going to do some changes to the amounts here. We're going to remove the cents. So let's do that next. We're going to go up to the reports, and we're going to remove cents by going to the fonts and numbers, and we're going to remove the cents here and say OK. And so now we see the information without the pennies involved in it. Now we're going to do some of our comparisons in terms of changing the name. I'm going to make that a February comparative income statement, and we'll just take away some of this information as we have been doing, so we're not printing the date and the month and the accrual method. So we'll go back up to the customized reports. We're going to go to the header and footer tab, and this time we're going to remove the date, the time, the report basis. And then we'll change the name. Instead of just profit and loss, we're going to call it a February comparative income statement. I'm just going to copy and paste that so you don't have to see me misspell and that. So it's going to be February comparative income statement. And that will be shown once we select OK. And that will remove these items and give us a new title. So we're going to say OK. So February comparative income statement, there we have that. And we have removed this information. So this is going to be our custom report here. We're going to go ahead and save this or export it to a Excel sheet we have already created by going to the Excel drop-down up top and create a new worksheet. And we are going to put it to an existing workbook. Browse to find that workbook. Happens to be going to where we would like it. That's great. We're going to select that and either select open or just double click on it, and then we will export this information. It should then open up Excel, export this information to a new tab within Excel, and when it does that, we will then do our normal changes, including moving the Excel tab to a new location, to the end location, and we'll do some adjustments to the view screen. You can see that we have a few tabs open here now that we've done. I'm going to have to move over by selecting this item because we've got so much work we've done so far. And then we're going to grab this sheet and we're going to pull it all the way to the right. And we do some normal cosmetic work here. We're going to go to the View tab up top. We're going to go to the Windows section. We're going to unsplit the panes. And then we can rename this. I'm going to double click on that. Just going to call it FEB, Comparative Income Statement. Something like that, something short that we can fit on the tab section. Then we're going to go down here to the page layout and see if everything looks okay, this little icon. And it looks like the header is there, that's great, but this information's on we have this information on a different row. Now if the column is on a separate sheet, you may even want to go to this tab over here. We'll go to the last tab, Page Break View. If we select that, it'll give us this really small kind of window, but if I'm making this larger by going to 115 over here. And that'll show us exactly where the page breaks will be. And that's useful for us because we really don't want to print this out. If we gave this to someone and printed it and had this column on another sheet, that's kind of not acceptable. That's a little ugly. So what we're going to do is we're going to fix that. There are a couple ways we can do that. If we go back to the normal view, we could do that by going to the layout and making this orientation rather than portfolio. I'm in the page layout, we're in the page setup group. And we could change it from portfolio to landscape. That would be the traditional type of fix, and that'll put it all on one page. The problem with that is that sometimes if all of your other reports are portfolio and you print that landscape, then you have to turn the page when you go through the stapled pages, and you might got to decide which way you want the landscape thing to go, if it wants to, how you want to staple it in there. So you might also, if it's pretty close, want to keep it portfolio. So we might want to keep it portfolio like this, and then just try to adjust the columns. For example, we might just try to get rid of altogether these columns that have no data in the middle by just highlighting the whole column and just deleting those, and see if we can keep it all landscape. This might, or we could make these pretty small, right? We could have tried that, but I'm deleting them. I've already started here, so I'm going to finish that. And it looks like if we delete all those, it'll be on a column there. So that's, a couple options we can have to do that. And once we have that, it'll fit on a page. So the point is, you want to do a couple different adjustments and see what format will work best. And then we're going to go ahead and save this information, save that information, close this out. Note that if we were to print this report out from QuickBooks, I made these columns a little bit wider just so we can make sure to see this example by selecting this item and make them a bit wider. If we were to print this, we might have the same printing problem, meaning QuickBooks does not necessarily just make it print on one page. We talked about this a little bit earlier, but it's worth looking at. If we were to print it from here and go to report, and if we didn't have this check mark checked, it might be checked from previous printings, but if it's not checked, and we say go ahead and preview it, then we could have on multiple pages here. And the same type of thing, the same type of procedures that we can go through to get the printing look good. We don't want to give that to somebody that it's printed like that. So what we'll do is we could change it to landscape here. We don't have as many options on eliminating rows, but we could make the rows smaller. So then we could say preview that and see what happens, and that will almost do it. And then of course we can go back, and if I didn't want to do that, if I want to bring it back to portrait the way we had it before and close this out, we could try to make these rows smaller. And that's one way we could fit it on one page. Go to customize report, and close that back out. Go to print reports and see if that brings it down to one page, which it does. If it doesn't, we could try to do other things like change the font, which we talked about before, which would be in the customize and fonts. We could change the font sizes And if that doesn't work, of course, the last case resort is to go to Customize, and then, is to go to Print Reports, and then fit it to 1 page wide. Fit it to 1 page wide. You don't want to do that unless it's a last resort, because once you do that, it's going to change the size of the font, and it won't look exactly the same as prior reports. But at least we'll get it on 1 page, so that it'll be on 1 page, and that'll be better than having columns on another page. And so that's a couple things we can look at and work through when printing these reports.